So that's the first week of the stock market over this year, on to the second week this year of the stock market in 2023. And the first week's always the chilled week. That's when everyone's just trying to come back off holiday, everyone's trying to get back into the groove. You see the stock market a little bit more chilled out. There's not that much news, there's not that many companies reporting earnings. Who wants to report earnings on the first week back? And you can see everyone just easing it in after eating a bit too much turkey, having a bit too much of a good time. And as we get into the second week of the year, we start to get back into the groove and we start to have some key data coming out. So today I'm going to share some dates with you to keep it in your diaries of key data that's coming out for the stock market, as well as when we start to see some companies reporting their earnings, because obviously Q4 finished, so we're going to start getting the Q4 earnings coming up as well, and we'll be talking about some of them, so hope you enjoy the video. So we take a look at the S&P 500. Not a bad start to the year. We're currently up 1.8%. Obviously we've only had 5 days so far. Well, technically actually 4 days, because we weren't open on the Monday. So positive start to the year so far, but obviously that can all change with the other 51 weeks that are still to come. But so far, very much being dominated by Chinese stocks, taking a lot of the headlines. We talked about this on Friday's video. A lot of the Chinese stocks are having a very good start to the year, as there's a lot of optimism starting to return to China. We mentioned about Huye and how well that has performed. Also a stock like Alibaba as well. Obviously that's performed very well, up 16% year to date. So obviously absolutely fantastic. Now for some of the key data that's coming up. First data to stick in your diary. Inflation data. Inflation data is going to be coming out on the 12th, so that is this week, obviously on the Thursday, and this is going to be very keen, especially when you look at the forecast they're projected for the inflation data this time round. I saw the forecast and I was like, wow, that's a big drop off this time round. So if we look at the moment, inflation peaked around June time, even though it was downtrending through July, August, September. People were still a little bit worried about that inflation data, because through that time period, even though it peaked and it was coming down, everyone was looking at that and going, oh, okay, it was only down 0.2, it was only down 0.1. Everyone was kind of looking at that inflation data and going, yeah, it's peaked, but it's not coming down fast. And then we got to October and November time, and then we saw the big massive drop off in inflation data, which was really positive. And obviously in the last one, we actually came at 7.1 and the consensus was 7.3, which everyone was like, wow, that is a big massive drop off. Now going into December, the actual forecast is to come in at 6.5. That's the forecast, and we were 7.1 like we just mentioned in November time. So when we look at this drop off in December, this is, a big jump of 0.6%. We saw that drop off in the last period, but it wasn't forecast for it to drop off that much. We were only expecting a 0.4% drop off. So you can see here, consensus is a massive drop off in this inflation rapidly. Still expecting this rapid descent that we've been on to continue and to pop into that 6.5% range. That's absolutely crazy drop off. So I'm looking at what's forecast here, the consensus here, and I'm like, I don't know if we can drop that much. That's a really rapid drop. So I'm looking at this thinking, I don't know if it will come in at this positive rate that is forecast. I would expect, 6.6, 6.7. Even then I'd be like, okay, it's still massively decreasing and we're in the 6% range, which is positive. But I mean, on the positive side, if we do come in at 6.4, 6.3, I mean, the market's reaction then we're like, whoa, that's, nearly a whole point drop in a month would be crazy. So we'll see what happens there. Obviously you need a crystal ball here, but my thoughts is that that's a bit of a massive decline here, and I wouldn't be too surprised to see it miss slightly, because that's a massive drop off. And then when obviously we get the inflation data out, that will make the markets move, and we'll see obviously some optimism if the inflation data comes in really positive. And probably I would say Wednesday and Thursday they will be kind of standoff waiting for the inflation data on the stock market, and then all eyes will turn to the Fed. The Fed will have the first meeting in 2023. The first meeting is going to be on February the 1st, so it's not actually this month, but we won't have to wait long into February to get it. And obviously the Fed will react and consider the data that comes on here, which is obviously the key part that we know is going to happen. Now at the moment it is very close between if it's going to be a 0.25% hike or a 0.5% hike. And I think even though at the moment people are assuming he's going to go, or Jerome Powell and the Fed are going to go from 0.75 to 0.5 and now already down to a 0.25, I was like, once again, we're getting a little bit optimistic here. I would be more towards a 0.5 hike, which is at the moment is not the favourite. 0.25 hike is the favourite at the moment. I'm not sure on that one. But I think the big swing is that if we did have inflation data and it comes in at 6.5, 6.4, 6.3, I would generally then look at the Fed and go, actually, 0.25 is probably the correct rate. So we'll see what happens. This is going to be the kind of domino effect, and we'll see what the Fed do, because I think that will be the key thing that will reflect what the Fed say, and then obviously the tone, what they say in the meeting, even though I think they'll still be like, yeah, we're still raising interest rates. But if we do see them go to 0.25, we'll see that they are actually really starting to consider this inflation now and realise we don't have to hike up the interest rate. So will be interesting to see how that all lines up going forward. And what the Fed have actually had recently is last week, a key bit of data that we did have is that jobs data actually still came in really strong. So we've seen here that we saw that the interest rates are apparently going to slow the economy, and we're going to see the US economy weaken and potentially a lot of job losses. Then we'll end up into an 08 recession. But even still now, with all these interest rates going really high, the economy and the jobs are still holding up, and we are not getting an 08 recession. The Fed's getting totally what they want right now, but we are not going to get a 08 recession without job losses. And at the moment, we are still not seeing any job data being weak. And even though the job data is strong, Wall Street didn't like this, because they're thinking, well, if we have weak job data, it might cause the Fed to pivot a bit early. And because it's staying strong, and they're like, oh no, interest rates are still going to stay high, the Fed aren't going to pivot. But I mean, I look at it from my point of view, and I think, well, this is the perfect scenario. If we have earnings still do okay, obviously not amazing, but okay. If we have the job data stay strong and we have inflation come down, then the Fed aren't going to keep interest rates up forever. I know that's the fear out there, but they generally can't. It would be such a stupid move, and we know they can be generally sometimes a little bit slow to react to things, but if they were to keep these up forever, it would be absolutely ridiculous. And I think that sometimes Wall Street are rushing to panic to get the Fed to pivot and think they want things to weaken, so they pivot. But really, what's the better scenario where things don't weaken and then they pivot? And that we could potentially still be on for that. So we'll see what happens there. Obviously, a little bit of a side topic, Tesla. Even though the market was okay last week, we still saw some weakness in Tesla. It was still down 5%. So the downtrend has sort of started to calm down a little bit, as you can see here, from like the 27th of December. But there's still a little bit of weakness around Tesla. Obviously, that's a hot topic that everyone's kind of staring at the moment, and if that's going to continue going lower and lower and break that 52 close of $101. So another one to keep an eye on this week and see if that weakness into Tesla continues. And then moving on to earnings. Earnings season does start this week, believe it or not. It is right at the back end of the week on the Friday. We start to have the banks, as always, that report earnings first. And on Friday, you'll see we start to get Bank of America and JP Morgan that start reporting on Friday. And that'll be some good information to get from there, from what they're seeing. I think it was Bank of America that said last time, like, we're seeing no weakness at all in the economy. So it'd be good to see if they're seeing any weakness going forward, or what their thoughts are on the current environment. So we do get the start of earnings season. We do have TSMC that are reporting earnings. These guys have shot up a little bit in awareness because they Warren Buffett, Berkshire Hathaway, started buying a stake in them, and these guys reported earnings, so it'll be interesting to see what they're doing. Also, that a lot of their income and revenue comes from Apple. We'll get some interesting numbers potentially about Apple from these sort of earnings as well. Semiconductors are really interesting. I was talking about this on Patreon over the weekend, and I was saying, like, the semiconductor space really does interest me at the moment. Just look at this one here. You can see the weakness on the share price since 2021. And there's been a lot of negativity priced into these semiconductors from this boom, because there was a massive boom and need of semiconductors, and all semiconductors went crazy. And then there's the pricing of a slowdown now. And you look at a lot of these semiconductors that are pricing in slowdowns, and you're thinking, there's opportunity here. Like, we still need loads of semiconductors in the next 5-10 years. Data centers, from autonomous vehicles, electrical products, 5G networks. We need so many semiconductors in the next 5-10 years that you're starting to see a lot of these semiconductors start getting beaten down, and they look really interesting opportunities going into 2023. I think even this one looks, TSMC, Taiwan Semiconductors, looks kind of interesting. I think AMD is the big one. AMD is staring at like probably an interesting opportunity in 2023. So just a little bit of a side topic there, but obviously that's one of the companies that are reporting earnings, and then obviously we get the banks. And if we look at a longer term calendar, you'll be able to see here that once we get this week done and the banks start coming in on Friday, we start opening up to obviously the more banks, and then we get the likes of Netflix starting to come out. Obviously Netflix is normally one of the first ones that we have that report earnings, and then by the week after that, on the start of the 23rd of January, we start to have really the big build up onto earnings. And like this week here, the Tesla week, we'll still have some big names coming in there, like Microsoft, Facebook, for example. And by then we start hitting really peak earning season. And what's going to be really interesting about these earning seasons that comes up is that we are going to have Q4. And what happens in Q4 is all the companies basically come out and say, unless you could see this happening, I think a few of them did it actually last year, is that they say, oh, we're not providing full year guidance at the moment. But a lot of companies will try to provide full year guidance in these earnings reports. And we get a kind of a good idea what companies are expecting. Are they going to have a good year? Are they going to have a bad year? Are they seeing a start into 2023, which is worrying them slightly? And it'd be interesting to see what companies come out with what. And you've seen the likes of Tesla, for example, will have so much information about Tesla, because they by then they'll be nearly a month into the first year, and they'll be able to give some good guidance of what they're projecting. And at the moment, analysts are expecting I think it's like 39% year over year growth, and Tesla might come out and go, yep, there's no chance we're making that. And that'll be really interesting. If Tesla then come out on that day and go, oh yeah, we're going to do it, then you'll be like, whoa, like that's something that I personally, wasn't expecting, but then the market should be fine with that. And there's a lot of companies like that. There's a lot of companies that will be interested to see how much growth are they actually pricing in. The likes of Amazon, Meta, what are they expecting? So it'd be really interesting to see what some companies are going to be saying long term, what this year, what they're going to be achieving, and that should move stock. That guidance there, what they give this year, should move stocks quite a fair bit, which is really interesting when we get around to the earnings this time round. So yeah, I hope you enjoyed some of the key dates to be looking at going forward, and just a few things, a few thoughts there, and a few things to be watching out for. Hope it was a little bit useful. So yeah, hope you enjoyed the video. Smash the like button. If you're not already, join the Patreon. Link is in the description. It's £5 a month. I post my live buy and sell alerts on there, as well as posting at least 2 exclusive videos a week. I actually posted 3 exclusive videos last week on the Patreon. So if you do want to see a little bit more content, join through the link in the description. And like I said, it's £5 a month, and I think for what I try and put on there is definitely worth it. So if you do want to join that, there you go. And I'll see you on tomorrow's video.